Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We're going to take a look at a few top ETFs for the next earnings season with our ETF Research Director, Nina Mishra. And we're going to be bumping up against the next earnings season here in a few weeks, huh?
Yeah, exactly. In fact, some of the S&P 500 companies have already started reporting. And the first Dow component, Nike, will be reporting tomorrow. So I don't know whether that will be the start of the official earnings season now that Alcoa is out.
in the Dow anymore, yeah.
Yeah, but we are still 2-3 weeks away from the peak of the earnings season. But since the markets act on forward expectations, so now may be a good time to look at some of the top ETFs for this earnings season. And if we look at Zacks earnings estimates, this is going to be another lackluster earnings season. Earnings growth in all is expected to be just 1.1%. But as always, some sectors are expected to perform better than others. So we are taking a look at two of the sectors which are expected to report highest earnings growth this earnings season.
Those are transportation and finance.
Yes.
And the tomorrow that you refer to, just so everybody is clear, is September the 26th.
Yeah.
Right? Okay, so transportation first.
So let's talk about transportation. Transportation sector is considered a leading indicator of the health of the domestic economy. It's considered a barometer, so it has been doing very well this year. Railroad traffic has been rising, airline traffic has been rising, and with an improving economy, the economy has been improving slowly but steadily, so this sector should continue to do well. It is expected to report 10.7% earnings growth during the third quarter. And if we look at FedEx's earnings results, they were pretty good. So if there any indication, the results for the sector should be good.
And an example that you have for us in this sector?
I have iShares Transportation ETF. The ticker is IYT. It is the largest and the most liquid ETF within the sector. It is a Zacks rank 1 strong buy rated ETF. It charges an expense ratio of 46 basis points. Highest exposure to railroad industry. So almost 1/3 of assets are in railroad companies, and which is good because railroad traffic is at the highest level in 5 years. Among the individual holdings, Union Pacific, Kansas City Southern, FedEx, and UPS are the top holdings.
Okay, now in finance.
Finance has been an earnings growth leader this year. The sector has been doing very well, expected to do well in the third quarter as well. Earnings up 7.4% for the sector. And within this broader finance sector, I like regional banks more because big banks, are hit by a number of issues, stringent regulatory requirements, then all these huge settlements related to their prior misdeeds, and there are reports that trading revenue for bigger banks is going to be much lower during the third quarter. Whereas big banks are suffering from these issues, regional banks which have simpler business models, they are smaller, they focus on local clientele, and normally they are in the business of just borrowing, taking deposits and lending money. They are in a much better position now. They have been benefiting from a steepening yield curve environment, and after the no taper shocker, some of the regional banks sold off because people thought maybe the taper is off the table, but taper has just been postponed. It is not off the table. Yield curve will continue to steepen, and the rates are going to rise. Continue to rise. So regional banks are best positions in this environment, and I think some exposure to regional bank ETF is required.
Okay, and your example here?
My example is Spider S&P Regional Bank ETF. The ticker is KRE. It's a Zacks rank 2 buy rated ETF. Charges an expense ratio of 35 basis points. It holds about 39 regional banks, small regional banks, in almost equal weight because this is an equal weighted index. So individual bank-wise risk is largely eliminated. Charges an expense ratio of 35 basis points and has a decent dividend yield of 2.80%.
Okay. Do you own either of these two?
No.
All right. Check out other ETF articles and commentary on our website in the ETF section. And check back frequently because those articles change a few times a week. With Nina, I'm Terry Ruffalo.